Hey everyone, how's it going? We just got the closing bell for August 6th, and we got the rebound that we were looking for. So yesterday we were talking about how if we closed above 519 and the VIX dropped, then we would be comfortable starting to lean our portfolio to the bullish side. Not go full on bullish mode, but just to start leaning it bullish. And specifically, we wanted to be in the more defensive sectors. XLU, XLV, XLP were the ones that we were really looking at. So now that we did close above 519 today, I want to reevaluate and just see if that's still the plan and if those sectors are still the ones that are looking good. So we crossed above 519. We bounced off of this anchored VWAP. We were saying how yesterday we were saying at first it was looking like maybe 50-50, looked like a similar situation as Friday. But after looking at the momentum, it did look like we had more upside momentum. And so we definitely did get that bounce. And as you can see, we went up quite significantly, but we ended more towards the bottom. So that's not excellent news. That's not giving us super comfort for a bounce. And what could happen is we hit this resistance near the EMA 100. We didn't make it to the EMA 8. And so we may just chop, or we could just bounce. And then this could be the start of a downtrend or a small downtrend. And we might break below that VWAP level and start testing that MA 200. So we're not in safe territory yet, but it is time to start to lean a little bit bullish. And if we get more confirmation of bullishness, then we can go more bullish. Or if we start to go downwards, then at least we're in the most defensive sectors and we're not hurt too badly. Or we might even still do okay, because if we go down, it could mean that money moves into those defensive sectors. As long as we don't go on to full on bear mode where everything gets sold off at the same time, then we would actually still do okay, even if the broad market goes down a little bit. So that's so far we're looking okay. What I want to know is where we closed relative to the range today. So if I look at today's high was 529.75 and today's low was 517.87. That's 11.82. I'm going to add that to the low. Well, why would I add that to low? That would just give me the high. What am I doing? I'm going to subtract out, here we go, the 522.19 where we closed, 522.19 minus the low, 517.87. Okay, and then I'm going to divide that by our range, 11.88, I think it was. Okay, so 36%. So in terms of the range, we're kind of in the about 1/3 of the way. So we dropped about 2/3 of that entire range into where we closed right there. So that's definitely on the weaker side. It's below 50%, but if it was below 20%, then I'd be a lot more concerned. So it's kind of like neutral-ish territory, maybe a little bit more towards leaning towards chopping sideways. So let's take a look. We do have this idea that we hit this resistance over here. So that might become a strong resistance because this was, I guess I maybe shouldn't have erased all my lines before, but that's okay. So over here around this 530 level is a resistance point, which it did hit and it did come down. This is going to prove to be a little bit more difficult to pass on the way up because we'll have the EMA 8 down here pretty soon. We have that EMA 100 here, and we have this horizontal here. So that's going to be pretty difficult to get through. And then that 540 level, which was one of the key places that we were looking at before, as that was the bounce right here, then that's going to be some pretty key resistance as well. If we can't get beyond those levels, then chances are that we could come back down, not necessarily crash down below the VWAP, but we could just chop sideways. So I still feel good about going along on defensive sectors, but I want to be very careful. Actually, this is going to be a little bit of a delicate exercise, see if we can thread the needle, because there are going to be sectors that are not going to look good. That rejection off of that EMA 100 is not great news for example, it's not going to be good news for tech. I already know that for sure. So what that means is it's not, we cannot be fully bullish yet. The sector that got us into trouble, or the sector that led us on the way up before, is, and then got us into trouble over here. Well, we would want that sector to lead on the way up, and it's not happening so far. Let's take a look at what happened in QQQ. Actually, let's look at VIX first. VIX down to 27.95, still elevated, still well above 20, still much higher than we've seen in quite some time. Okay, so for over a year, almost a year and a quarter, year and a half so far. And that was weird. How did a trade just get executed? You guys heard that, right? I'll have to check into that later. Apologize for that distraction. So it's been a while since we've seen this. So VIX is still elevated, and that does mean that we are still at risk. So we're very careful about the sectors that we go into. When I look at QQQ, what happened? We just bounced right back into that VWAP, right back into this box. And actually, we closed just below both of those things. So that's definitely not strength. We are smack into resistance. And this could easily come back down. So this is what I meant by threading the needle. We could go long on the SPY, certain sectors, and then go short on the QQQ sectors, and then just kind of thread this needle, see if we can take advantage of both movements, because it is a pretty rare event that QQQ and the SPY don't really line up all that well. The QQQ, all of the stocks in the QQQ are in the SPY. It's just that we're tech and consumer discretionary heavy. So when they're out of whack, what it means is that there is a disparity, there is a divergence amongst the sectors themselves. And we want to see if we can take advantage of that. So let's take a quick look at RSP, the equal weighted SPY. Equal weighted SPY, same thing, bounced off of VWAP, made it to past the MA50 all the way to the EMA 8, but hit that same area of resistance and came right back down. So this could slowly either chop around or slowly move upwards, as long as we're in the correct sectors. And then if I look at the QQEW, that looks super weak, super weak. It's below the MA200. We tried to come back up a little bit today. We did a little bit, but still well below the MA200, well below the EMA 8, well below that anchor VWAP. And if we look at the regular QQQ, you can see that we did not go below that MA200. We went to, and then we hit that anchor VWAP. So the equal weighted QQQ is even worse than the QQQ. And so that means we should be taking a look at those momentum levels very carefully. And that basically the QQEW is telling us that there's a lot of weakness. It's basically bearish, very bearish on the QQQ. I think we saw that yesterday as well, but we can refresh ourselves and take a closer look. Let's take a look at IWM, small cap stocks. Same thing, bounced off of the EMA or MA200 up into that anchor VWAP. This did stay above it, but it did hit this resistance, this pink line right here, plus the MA50. It is above the anchor VWAP barely. So this is in a precarious situation. And if the QQQ is not doing well and IWM is not doing well, then we cannot expect a bullish market. So again, we are very selectively bullish and only tiny bit bullish. So, we are still mostly, for the most part, neutral. It's just that the way that we're neutral now is not across the board. It's certain sectors we're kind of bullish and certain sectors we're kind of bearish. And on net as a whole, we become neutral. So it's a very delicate situation. We have to place our money very carefully if we're going to put it to work. And for me, I try not to stay in cash too long. So I like to put things to work. I like to put my capital to work. So we're going to thread this needle. We're going to see how well we can do. Let's take a quick look at Dow Jones. Dow Jones is not looking great either. It went down to its anchored VWAP, or actually a little bit below, gap down below it yesterday. It tried to recover, hit that resistance at the MA50, and then came right back down at the anchored VWAP. So very similar to what we saw in IWM. So a little bit stronger than QQQ, not as good as SPY. That tells me that it's very specific sectors, because if even the Dow Jones industrials are not doing well, then that we've just eliminated tech, we've eliminated consumer discretionary, we've eliminated industrials, we've eliminated basic materials, we've eliminated transport, we've eliminated energies. There's not that many sectors left. And from yesterday, we know that we were concentrated on utilities, healthcare, and staples. And it's probably still the case today, but we definitely want to check and verify. But we're going to go through our process. We're not going to jump the gun. And we're going to take a look at our momentum, 90-day highs and lows. Okay, 44 90-day highs, 78 90-day lows. So you see that yesterday we got to the point, almost to an extreme, where we got to 300 and something. And we said that when we hit that, what's going on here? When we hit over 400, then we're very certain that within the next couple of days, we would get a bounce. And we didn't quite hit 400, and we got the bounce. So again, not everything is super precise, and we just got the bounce a little bit earlier. The market was a little bit stronger than normal, and so it bounced from a 374 instead of a number over 400. So as of today, we are back into neutral territory, and what we were saying earlier was that chop. That's a very distinct possibility as we chop in this area above that anchor VWAP and below that EMA 8. But if we pick our sectors very carefully, there is room for us to move upwards. That this is a pretty large range, even though we are bound by it. That's a pretty large range. That's a good range. That's good enough for 40, 50, 60s, maybe even 100% on the right symbols and the right options. So that there's definitely opportunity here. So now I'm going to look at my other momentum. We are keeping in the back of our head that the overall market is not looking great. It's looking bearish, or actually today a little bit better. Yesterday was not looking so great. We were 47.79% on that MA200. Today we popped back up above that 50 mark. So we're not in as much danger as we were looking yesterday, but this is still on the cusp. This is not super comfortable. And then we'll look at our sectors, and we'll just go straight down. And once again, we've got tech not looking good, energy not looking good, consumer discretionary not looking good. So those are the ones that we're going to be more interested in potentially shorting. And then the strong ones, we've got staples, that's looking very strong. Healthcare, looking very strong. And then real estate, very, very strong. And utilities, very, very strong as well. Real estate is interesting. I'm not sure. I would have to look at a chart to see if we're ready to go back into real estate as longs. But yeah, I might as well take a look. Okay. It's actually looking pretty good here. Yeah, that's looking surprisingly good. I guess I haven't looked at real estate in a positive light in too long. This is looking really good. That'd be interest rates, but interest rates aren't really in focus right now. What is in focus, though, is that carry trade. And what was really interesting actually today Well, you see this, we were above the VWAP basically all day. And then over here, right around a little bit before 11 o'clock, we started to see the sell-off and we ended the day below the anchor VWAP. This is a very similar situation as yesterday, except at the end, we broke below the anchor VWAP and then we popped back up. So this is indicating a downward bias and momentum. It could change in Asia and Europe overnight, but at least we went into the Asia sessions weak. And so here we were below that VWAP and we popped back up. Right around here is when we started to hear whispers. I couldn't confirm, but I started to see little messages flitting around and people telling me and talking to me saying that the Fed indicated that there would be no emergency rate cut. And then this is what happened after that. So I think it was yesterday, I made a pretty big stink about a lot of people writing articles and some people pushing out this viewpoint that there would be an emergency rate cut, that just because the S&P and the NASDAQ kind of gapped down over here over the weekend, that we needed and we were going to get an emergency rate cut. And we even still have some articles coming out today, how but what people who are watching the Fed, or Fed watchers, they call them Fed watchers, are pressuring the Fed to cut rates. And they basically, at least according to the rumors that I've been hearing, I need to verify, but I heard that they said, no, we're not, there's no emergency rate cut. And I was saying yesterday how it's completely unwarranted and it's way outside their job and their purview to do a rate cut, an emergency rate cut in the situation that we're in right now. And it would be so blatantly obvious that they're beholden to the market and beholden to the politics that there's no way that they were going to do it. So looks like maybe Powell or someone at the Fed actually indicated the same thing, and I get to keep my job. So we started to move downwards after that unconfirmed bit of news, and that started to move down. Maybe it is confirmed, just not confirmed by me, but we started to move downwards. And so this is creating that situation where we can kind of thread this needle. We'll have some opportunities to the upside and the downside. The reason why if everything is due to this carry trade that I talked about yesterday morning, which was that a lot of institutions for a very long time have been borrowing from Japan at a 0% interest rate and then taking that money and investing in the US as a form of arbitrage, is basically free money. So you get money for free from Japan. You go and you do the currency exchange, convert it into US dollars, then you go buy US bonds or you go buy US stocks. And what kind of stocks did we buy? Well, we've been buying the AI and SMH type of stocks. So what happens when Japan starts raising their rates and says, hey, we're not giving you 0% anymore. We're going to charge you 1%, 2%, 3%. And then suddenly the exchange rate responds to that, and the US dollar gets massively devaluated versus the Japanese yen. So let's go USD JPY, US dollar Japanese yen. See that? Huge crash down in the US dollar Japanese yen. So that means that in order to pay back my loans in Japanese yen, suddenly it's very expensive for me to convert back into Japanese yen so I can pay back those loans, so I can make payments on those loans. And so what that puts the people who are in that carry trade at a lot of risk. And so you will see selling of assets in order to reduce that risk, but also in order to make those loan payments. And so is this carry trade, is that able to be unwound in just a couple of days? And it's very unlikely because a lot of institutions would have been doing this, and a lot of people would have been building a book over a number of years, and it's not going to be unwound over a couple of days. So that is the argument for continued movement downwards. So that is going to be centered more in the QQQ. Why? Because a lot of the things that were purchased, at least in the last year, were the SMH and AI type of stocks, which is the QQQ stocks. So there's a lot of forces here that are putting pressure, particularly on the QQQ. We also had the antitrust thing with Google, and that's going to have spillover effects into Apple and a few other things. So if we look at Google today, Google was down 0.0, basically flat. It's down 0.06%, and Apple down 1%. So Apple did not participate in this, in the continuation of the movement upwards today. So that is two mega cap stocks in the space. Let's take a look at Microsoft. Microsoft up, okay, it did recover some, and then Nvidia did recover some as well. So at least two of these mega cap stocks were not able to participate in this bounce, and so we definitely have downward pressure on the QQQ stocks. So here's what I'm thinking. I'm surprised by real estate. I'm willing to take a chance on it in a small allocation. Let's take a look at XLU. XLU is looking pretty good. That was quite as it did go parabolic and then come down. So now it's looking good. It would have been wary here a couple days ago. Last Friday, I did say, even though it's parabolic, it could continue to move upwards. It did for one day and then came right back down. But now that we're at the EMA 8, then it's fine. It's looking good. So I do like XLU, XLP. XLP is really choppy, really choppy. And we do have an upward movement, but it's very slow and very mild. So my money would be better allocated towards XLU. So XLP is still, yeah, it's still good, but not nearly as good as real estate and utilities. Let's take a look at XLV. XLV, not as good. We want to wait for a confirmation bounce. We want to break above that EMA 8 before we got comfortable with it. So we're looking at XLU, XLRE as potential longs, and then XLK. Let's take a quick look at that. Yeah, not looking good. SMH, not looking good, but better than XLK. SMH, wait, we just looked at SMH. XLK, SMH, XLC. XLC definitely looking better than both of those. XLY. XLY not looking good at all. So XLK, XLY, we can just look for some shorts. And then this is not really paired up trades because we're in completely different sectors. So the one moving up would not necessarily influence the other moving up or moving down. So we can't say, hey, if we go long here and a short here, then we're balanced and we're neutral. That wouldn't be the case. So we would either just understand and just say, hey, we're threading the needle right now, and we're going to rely on our skill and our capability of stock picking in order to maximize our performance, and just manage our risk from our position accordingly. Or we can put in a little bit of a hedge and say, okay, let's go long a utility stock and short a utility stock, long a strong utility stock, short a weak utility stock, or the same thing with real estate. Or we could go short a XLK, a technology or discretionary stock, and then long one of the stronger technology or discretionary stocks. So we would just very carefully pair these up, and I probably don't have time to look at examples of that. We've already been talking for about 25 minutes. So we'll just leave it there. Okay. So we're in this really interesting balance of a situation. I guess I should look real quickly before we end. The last thing I'll do is we'll take a look at our sectors because I didn't do that yet. So look at how our sectors are looking. This is on a longer term basis, average basis. SMH still looking good. Utilities up here with home builders and communications. So we're getting jumbled up. We're getting really jumbled up on a longer term basis. If I look for a week, XLU, XLRE, XLP, gold, healthcare, no surprises. Communications is a little bit of a surprise, but all the rest, that's exactly what we've been talking about. And that's over the last week. And then let's take a look at today. SMH, that's interesting, but we saw that it just popped right into resistance. So we're not going to trust that. Plus, we still have this carry trade going on, and we have all this resistance in the QQQ. So we're not going to trust that SMH movement. And actually, we'll take it as a sign. We'll take it as a sign of a pullback, and that's an opportunity to enter short, actually. Let's take a look over here. Same with tech, financials, and industrials. Let's just take a quick look on the chart. Not looking good. Looking not bad. This one's real estate. Yeah, we already looked at that on a bigger chart. Not looking good at all. Looking like this could be a very good place to get picked off and start heading back down. XLF is kind of like maybe we'd really want to see a lot of confirmation first. Same with industrials. Small caps looking weak. Biotech, we need some confirmation. This is kind of neutral, like a question mark. S&P 500, same thing. It could move up, but it would maybe range bound, difficulty moving higher past that 540 points. XLC looking decent if it can get above 85. If it can get above 85, XLC actually looks okay. And that would be the kind of one sector within tech that is looking good. XLU looking good. XLY very not good. XLP looking okay. On this zoomed out view, it looked better than when we looked at it on the other chart. But again, this is a lot of really choppy movement, and for the most part, sideways movement. Although all of our moving averages are sloping upwards, it's just saying that we're caught in a lot of muck right here. So XLP could be in for a very slow grind if we are going to move up. XLE looks like it's ready to be picked off as well. Dow Jones, we would want confirmation. Retail, not looking great. Healthcare, if we could get above this 148 level, that would be looking good. Home builders, if we can get above 110. Defense, if we could get above 138. By materials, weak, looking very weak. There's a lot of resistance right here at that 90. So I would avoid materials. Gold looking good. That's looking like it could go on for another bounce, maybe not to a new high, but at least matching these highs. Silver is weaker than gold for sure. We'll see. It's hitting some support right here, so it might bounce a little bit, but not necessarily go screaming towards these highs up here. And then we have TLT, which is so much is going on between flight to quality and carry risk trades and all of this, and then is the Fed going to cut or is it not going to cut? TLT is a little bit messy right now and hard to discern. So we would just wait for it to settle down before we started to take a look at TLT again. So really, we just went through all of them, and the only ones that we thought looked good were XLU, XLRE, and then XLV if it could get above a certain point, and XLP, it was just a lot of chop, a lot of messiness. So everything that we just looked at confirmed as well. Yes, money did start to come back into some of these sectors, real estate, technology, financials, industrials, but most of them are setting up for a high probability that they're going to move back downwards. So we're not going to buy into this one-day movement or one-day recovery, quote unquote recovery. It's not even like XLK up 1.87%, or 1.36% sounds impressive, but yesterday it took a nosedive for 3.33. So we recovered about half. So not impressive. So we're gonna start making this interesting. This is an interesting, fun period for people who have the skill and to thread that needle. And we'll see how we do. So just be careful going long because we could get chopped sideways no matter what major index we're talking about. And if we're talking about QQQ or IWM, there's a potential for us to just pop right back down. So be very, very, very careful going long. And if you're going to go short, you want to evaluate that risk to reward very carefully. Because right now, right, if we pop down to that MA200, or if we finish filling this gap up here, that's about the same distance. And that's not a great reward to risk ratio for your shorts. Okay, so I'll end it right here. We'll see what tomorrow brings, but we're going to start picking see if we can start picking some interesting longs and maybe some interesting shorts. Have a wonderful rest of your day, and I will see you tomorrow morning.